Welcome to Kings and Queens accounting class. We're now going to be looking at the 2016 past paper. Let's get right into it. Question 1. A non-trading organization is mainly concerned with, and our answer is D, providing various services for its members. Question 2. The term accounting refers to the, and our answer is C, recording, analyzing, and interpreting of business information. So C is our most appropriate response. Question 3. Which of the following accounts are nominal? That is, which of the following accounts are nominal? Now, from the list presented, A is your most appropriate answer, wages and rent. Remember now, nominal account has to do with income, expenses, and revenues. Question 4. How would you classify land and building in a balance sheet? And our answer is A, land and building would be fixed assets. Question 5. Which group of assets below is recorded in the order of liquidity? All right, so when we examine the responses, we're seeing that B is the most appropriate answer. We have cash, stock, building, then land. All right, so B is the most appropriate response. Question 7. The summarized position of Foster and Scott Limited at 6th of March 2015 was, and they have shown the current liability, current asset, fixed asset, long-term liability. And our question is, what was the capital of Foster and Scott Limited at the 6th of March 2015? So we want to determine the capital. Now what we'll do is accounting equation. We add up all the assets, subtract from the liability to get our capital, because accounting equation says that asset is equal to capital plus liability. So we add the current asset with the fixed asset, that will be 300,000. We add the current liability with the long-term liability, that will be 210,000. Subtract the liability from the asset and we'll get the capital. And our answer is $90,000. So 90,000, which is B. Now question 8. Question 8 says, if the following list of assets found on the balance sheet of the retail trader were to be arranged in order of liquidity, the sequence would be, and upon examination, D would be our most appropriate answer. Cash, then bank, then debtors, then motor van, then fixtures, and then building. So D would be the most appropriate response. Question 9. Item 9 refers to the following information about the assets and liability of Mr. Jones. Now we have shown the assets and liability of Mr. Jones, and the question asks us, from the information above, Mr. Jones' capital amount would be, again, we're going to use accounting equation. We use the accounting equation. Asset is equal to capital plus liability. So we're going to add all the assets together. These are cash at bank, inventory, accounts receivable, and cash in hand. All those will be added together as assets. And then our liability would be accounts payable and bank overdraft. We total that and subtract it from the asset, and our answer should be D, $975. Now we're at question 10. A firm sold 50 items at $80 each. If these 9 items were returned, which of the following will the firm issue in respect of the items being returned? Let's go again. A firm sold 50 items, yes, at $80 each. Of these 9 items were returned. So that would have been the customer returning it to us. So it is returned inward. And once return inward is taking place, we're going to be using the credit note. So it would be B. The most appropriate answer would be B. Question 11. A trade discount may be described as an allowance given. So a trade discount may be described as an allowance given. So which alternative here, option is most correct? D. To traders who buy in large quantity. So D would be our most appropriate response. Item 12 refers to the following information from the books of a company. And we're seeing the cash sales, credit sales, stock on hand, joins, cash purchases, credit purchases. And our question is, from the information above, what is the correct closing total for the sales account? Now, as we examine this, what is the correct total for the sales account? Looking at the statement given, we'll add the cash sales with the credit sales, and that will give us our correct total, right? And so our answer then would be B, 55,000, right? It would be 55,000. Answer is C, 55,000. Did I say B? I'm correct. It is C, 55,000. Look again. We're going to be adding the 10,000 with that is the cash sales with the credit sales of 45. So it should be 55,000. See, 55,000. C. Let's go to question 13. Which of the following would not appear in the cash book? Which of the following would not appear in the cash book? And B is the answer option there. Goods sold on credit. All right. Credit transactions are not recorded in the cash book. Item 14. On the 12th of January 2015, a merchant purchased goods amounting to $1,120 on the following terms: 5% cash discount if paid within 30 days. He settled his debt on the 28th of February 2015. How much did he pay? All right. Now, when we examine the question, first of all, we'll find he got 30 days, yes, to pay. So the term is that 5% cash discount if he pays within 30 days. Now he's buying it on the 12th of January, right? And he's paying for it on the 28th of January. Now we would see if there is 30 days, yes, 30 days within the period in which he's paying. When we calculate 28th of February, yes, on the 12th of January, he would be paying it after the 30 days. And if he was paying it after the 30 days, then he will not obtain the 5% discount. So he will have to pay the full price of $120. That is C. When a proprietor withdraws cash or other assets from a business, what effect does it have on joins or capital? When the proprietor withdraws cash or other assets from a business, what effect does it have on joins or capital? All right. Now, the effect it's going to have on our capital is that it's going to decrease it. Right? So A is our most appropriate response. Question 16. On the 2nd of March 2015, Elan bought goods on credit worth $630. He receives a 3% trade discount on his amount, on this amount. The invoice, yes, also stated 2% in 20 days or net 30 days. How much would Elan pay for the goods if he pays on the 8th of March? Yes, 8th of March 2015. All right. First thing we are going to be looking at is how many days have passed since he had done the transaction. So transaction occurred on the 2nd of March and he's making the payment on the 8th of March. All right. And the terms of the transaction is for 20 days. So he would be paying within the 20 days. So he will get the 2% discount. So he receives a 3% trade discount on this account, on this amount. And if he's going to be paying up the cash before 20 days, he'll also get a 2% cash discount. So when we look at this then, we first will find 3% of the $630. All right. We'll subtract that percentage from it, and that will be the amount he should pay for cash. Okay, so this is how it will be worked out. 3% of the $630 would have been the trade discount. So that is $18.90. We subtract the $18.90 from the $630 to give us $611.10. We find the 2% of it, which will be $12.22. Subtract it from the $611, and our answer is $598.88. So there you have it. B would be the appropriate answer in this case, $589.88. Let's move on to question 17. It says, when money is taken from cash and paid into the bank account, the recording is referred to as, and B would be the most appropriate answer, a contra entry. Question 18. The ABC company deposited a check of $300 received from Mr. Murray. How should this transaction be recorded in ABC's books? So let's look at the question again. The stem is that ABC company deposits a check for $300 received from Mr. Murray. So how are we going to treat with it? Our best option is C, 2 and 3. Right? We're going to debit the bank account and we're going to credit Murray. Murray is paying the money, so Murray is going to be credited his giving. Question 19. Which of the following is not a nominal account? Which of the following is not a nominal account? And your answer is A, furniture. Question 20. An asset purchased for $1,000 is depreciated at a rate of 10% per annum using the reducing balance method. The book value of the asset at the beginning of The third year is, all right, so what we'll have to do first of all, we'll find 10% of the $1,000, and 10% is going to be 100. We subtract that $100 from the 1,000, yes, which is going to give us 900, and then we'll find 10% of the 900, yes, 10% of the 900 will be of the 900 will be 90, yes, and we take 90 from 900, we're going to get $810. So our book value at the third year would be B, yes, B, $810. Question 21 says, a mechanic starts his business with $10,000 worth of tools. What entry would be made to record this transaction? He's starting the business with $10,000 worth of tools, so capital is going to be credited, yes, and the tools will be debited. Our best answer is C. We debit tools, credit capital. Question 22. Goods were sold on credit to John Brown. Which of the following is the correct double entry to record this transaction? Goods were sold on credit to John Brown. All right, so John Brown is receiving, so we should debit John Brown's account. So A is the most appropriate answer. Debit John Brown and credit sales account. Question 23. Mr. K Trucking Company received a check from Mrs. Henry. How much must this transaction be recorded in Mr. K Trucking's book? So what is it happen here? He's receiving a check from Miss Henry. So the bank account or the cash book is receiving, all right? So our answer then, our best answer is C. C, all right, C says 2 and 3. We are crediting Miss Henry and debiting the bank account. Okay, question 24. It is showing us a table here with number of items, the invoice, price per unit, and the market price per unit. And we are asked, what is the value of the inventory stock? What is the value of the inventory stock? Now, first of all, when we're dealing with inventory, we're dealing with the cost price. Cost price of the items, not the selling price. So we would multiply 100 times 60, 80 times 100, 50 times 84, and 75 times 84, and the sum of that will be the response, the correct response. And from calculation, D would be the most appropriate answer, 24,500. Let's go to question 25. Question 25 says, an increase in joins will result in, and our answer is B, a decrease in the capital. Okay, we're at question 26. Item 26 and 27 are referred to the following information, and they have given us here, seem to be a balance sheet. All right, so let's look what they're asking for us now. What is the working capital? How do we find working capital? We subtract total current assets from total current liability. Our total current asset from the question is 25,000, and our total current liability is 5,000. So we subtract the 5,000 from the 25,000. That should leave us with 20,000. So the answer is A, 20,000. Let's go to 27. Question 27 is showing us here that if 2,000 worth of stock, yes, 2,000 worth of stock is sold on credit at cost, what would be the new working capital? All right. The stock figure would change, yes, if $2,000 worth of stock was sold on credit. The answer would going to be the same, because our stock figure will go up by $2,000 and our creditors figure will go up by $2,000. Hold on. We sold stock, was sold on credit, right? Beg your pardon. The accounts receivable will go up by the same $2,000. So let me correct that explanation. The stock figure will go down by $2,000, but the accounts receivable will go up by $2,000. So it would not change it. The answer still remain A, $20,000. We're now at 28. During the year, a company bought stationery for $220, yes, and it says here, and used $120 worth of it. It is the expenditure for stationery that will be posted to the profit and loss. Go again, what is the expenditure for stationery that will be posted in the profit and loss? All right, and our answer is C, the $220. Why? Even though they have used up $120, the actual cost of the stationery is $220. So whatever cost incurred in that period must be accounted for. Question 29. Question 29 says, a trader started with capital of $20,000 in the bank. If 12,000 of it was used to purchase building, yes, to purchase a building and plant, the balance of 8,000 would be, so let's look at it again. What we're seeing here is that our capital is 20,000. If 12,000 of it was used to purchase the building and the plant, yes, so the building and the plant would cost. So they're asking now, the balance of $8,000 would be, and that $8,000 could represent the working capital, right? We're saying it is C, the working capital. Item 30, the formula for working capital is, our answer is D, current asset less current liability. So ladies and gentlemen, this is the first half of our exercise and lesson on working out the past paper for 2016. Join us as we go to the second half of the lesson, okay? We will look at the second half of the past paper with you. So join us then.